Well, February is in the books, and what a month it was. The Dow fell 1,000 points, not once, but twice. The fear of inflation and the prospect of rising interest rates spread quickly through the markets. But as quickly as stocks fell, they rose again. The major indexes recouping a large part of those losses. If anything, the month marked the return of volatility, something that hasn't been seen in quite some time. The Dow Jones Industrial Average was off 380 points to 25,029, led lower by a drop in energy stocks and also oil prices. The Nasdaq was down 57 and the S&P 500 fell 30. For the month, all of the major indexes suffered losses. Bob Pisani takes a look at the month that was and what March may bring.
February has proven to be nothing short of tumultuous for the markets. Even though stocks have recovered roughly 70% of their losses since the correction, the Dow is still down 4% for the month. It's the first February loss in 9 years. Beyond that, both the Dow and the S&P also snapped 10-month winning streaks. This is an amazing run. We haven't seen a 10-month stretch of gains since 1959. So will March be a mess too? Not necessarily. Data show that in February, where the S&P drops more than 2%, the S&P was positive in March 67% of the time, an average gain of 2%. It's not bad. Still, March brings no shortage of other market-moving events for investors to focus on. First up, the Fed. Federal Reserve Chairman Jay Powell returns to the hot seat tomorrow when he testifies before the Senate. We'll see if he walks back any of his previous comments about the economy strengthening that spooked equity investors on Tuesday. Right now, the markets are pricing in about a 90% chance of a March rate hike. But it's looking more likely there will be 4 hikes this year instead of 3, and that's got people concerned. But there's plenty of other data for the Fed to factor into the equation. The jobs report is next Friday. It means another update on wage growth, along with a handful of other inflation reports and a first look at first quarter GDP. Finally, lawmakers in Washington will have their hands full dealing with another debt ceiling deadline. Government funding is set to expire in the first half of the new month. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.